Hello, and thank you so much for joining me for this segment. I'm Anthony Smith, lead economist here at FreightWaves, and I'm joined with Erich Fischer. Erich is a principal in transportation, automotive, hospitality, and services and strategy practices at Deloitte. He's a part of Deloitte's transportation leadership team. Erich, thanks so much for joining us today.
Anthony, it's great to be with you.
And just jumping into it, Deloitte is the largest professional services firm in the world. Given this, in your role as a consultant to the industry, you have the luxury of looking across a large set of clients and segments of the sector. What have you seen companies do pre and post-COVID to position themselves for success?
Thanks, Anthony. As you say, we have the privilege of being the largest professional services firm. We have about 330,000 people around the world. We serve the vast majority of the Fortune 500 and 1,000. And so we have really the honor to serve a wide swath of the transportation and logistics space. One of the things, COVID, as we all know, has created a lot of change in terms of volumes, trade patterns, and so forth. One of the things we talk with our clients about is regardless of whether your volumes or your rates are up or down or sideways, there are certainties and uncertainties in the industry. And these are just known. And we use these to help our executive clients focus and sort of drive the business. On the one hand, the certainties are things that they're not a matter of whether you address them, you just have to. It's a matter of how much and how quickly, right? Things like addressing the ever increasing expectations of the customer set, the connected customer experience, transparency, or improving risk sensing and signal monitoring. Those are some simple examples of certainties. And then on the other hand, there are uncertainties. These are things going on in the industry. You don't really know where they're going to go, right? So it's really up to the management to decide whether to address them, and if so, how. So, for example, expectations for brand trust with COVID and the virus, particularly in the last mile, has been a big deal, right? So how do you improve brand trust? Do you care about it? Do you work it? Or industry restructuring. We know it's going to happen. We just don't know how. So are you going to be proactive or reactive? And so if I boil all those down, and there are many uncertainties and certainties, the four I maybe highlight that are of particular interest to me is one, a massive increase in technology investment over the last year. Secondly, an on again, off again focus on cost structure. Third is an M&A space that's been hotter than we've seen it in quite a while. And then a final one, which is an opportunity to reposition and change the way public companies are valued by shifting business models. And that's something that we're starting to see some of our clients try.
Definitely. And Erich, I want to jump in on one of those points as you mentioned, technology. There seems to be a lot of investments in technology and analytics happening recently. What are some of the table stakes and what are some of the areas that continue to be unconquered or unsolved?
Yeah, this is really fascinating. And I think it's been a real surprise to see how much the technology investments have really ratcheted up over the last 12 months or so. And it's not just in transport and freight, it's been frankly across most sectors. We're probably busier than we've been in a long time in our technology, data, and analytics practices. And I'd say in this sector, we're seeing at least four flavors of this investment. One is the retirement of technical debt, move to cloud. The second is investment in logistics management and related systems, both off the shelf as well as, interestingly, a lot of proprietary investment there too. Third is an investment in connected, right? Edge devices, IoT, connected containers, connected rail cars. And then finally, analytics of all types. And I would argue that if we're not already in a technology arms race, we're darn close, right? In the sense of getting to a common ERP or cloud solution is becoming, if not already, table stakes, right? To have that backbone. But then the next horizon where we see a lot of emphasis is how do you take that and then use it to differentiate, right? Harnessing the true power of analytics, AI, machine learning, and so forth. And there's a lot of trying to figure that out right now. Not a lot of folks have figured it out. And really the key there that folks are trying to get to is how do you make technology as the business, not just an enabler as the business? And we could rattle off a lot of different aspects of analytics right now, but just to name three, right? Upstream supply chain visibility continues to be a huge push. All the efficiency related analytics, dynamic scheduling, and so forth. And then one that's I think you'll see a lot more of over the next few years is advanced pricing management. So how do you, if you think about it, a transportation company usually is dealing with millions, if not billions of SKUs at any particular time. You've got lanes, you've got different freight coming through different lanes, and all that all that supply demand varies on a day-to-day, hour-to-hour basis. So how do you optimize pricing? So one of the things we're doing is we're taking learnings from some sectors that have already kind of nailed this down and bringing it into this sector. And I think over the next couple of years, you'll see some really interesting things going on there.
Right. I mean, Eric, one of the things that you just hit on is so many SKUs coming across the board, and definitely interested in knowing as volumes have changed across the sector, there should be an opportunity for more operations effectiveness and efficiencies of scale. What is next on the horizon in terms of cost structure and efficiency?
Yeah, another interesting area, right? Certainly, I mean, this is a sector that's typically been pretty focused, needing to sort of hyper focused on operations efficiency, or at least some metrics associated with that, OR and so forth. And we can debate whether we're running out of runway on OR in certain modes and so forth. One of the things that we haven't seen as much emphasis on, and really an opportunity is what I'll call variabilization of the cost structure. So if you think about companies whose volumes have increased actually through COVID or over the last couple of months or so, we haven't seen as many scale efficiencies as you might think, and we also haven't seen as much planning for sort of future volatility. And conversely, for companies whose volumes have really suffered, we've seen cost reduction, but not as much variabilization. When I say variabilization, I mean taking the fixed costs or the sticky variable costs, which are the majority of the cost structure of most companies here, and truly variabilizing them. The good news is that over the past couple few years, there's a lot more opportunity to variabilize costs. So, for example, many have already or are moving to the cloud, and that's inherently a cost variabilization play, right? But if you look across back office to front office, there are a lot more opportunities to variabilize, whether it's accounting as a service or tax as a service. And one thing that we're working a lot on right now with our clients is procurement as a service. We take on sort of part of the transactional or expert-based portions of procurement, which is very volume, based, right? And we variabilize that for our clients. And so I'd say the opportunity, in terms of a next horizon there is doing more variabilization of cost.
So, Eric, definitely interested in hearing your take on it. How is this sector doing relative to others, and do you see any restructuring coming?
Yeah, I'll answer that in a couple of ways. With the caveat that certainly it's been a tough time for many. It's certainly, if you compare to other sectors, this sector hasn't suffered quite as much as some. That said, this is a sector that continues to lag most other industries in terms of how the market values it. Setting aside rail is a little bit of a different animal. But in other words, if I'm an investor and if I want to buy a dollar's worth of your stock, I may be willing to spend a dollar. But if I'm buying a dollar of stock in another sector, I may be willing to pay $1.50 or $2 or $4 or $8. And the key there is the business model. Because again, excluding rail, most transportation and logistics companies are on the whole valued as what we call asset builders, right? Like, for example, some auto manufacturers. Almost regardless, by the way, of whether you're asset light or asset heavy. We've seen a lot of companies in this space try to de-assetize because to try to boost their enterprise value, and that hasn't worked for a number of folks. It's just not that easy to do. But for example, logistics services companies are typically valued more highly than trucking companies, and rideshare companies and e-commerce companies are valued much higher. And again, the key is the business model here. And with M&A being so hot right now, we think there's a real opportunity not only to consolidate, as we believe that we will see, but also to reposition your business model to something that the investment community really values a bit more today, whether it's a technology, company as a technology company, or even a network orchestrator, an orchestrator of ecosystems across the transportation landscape. We're already seeing companies try to do this. And I think it's going to be really interesting over the next few years to see how that evolves and how that pans out.
Speaking of the next evolutions within the industries, looking at the next horizon, say the next 5, 10 years, what are some of the interesting but crucial things your clients need to be looking at?
Always a fun question. How many to pick here? So maybe let me focus on a few items here. One is restructuring. I think regardless, we're going to see industry restructuring over the next 5 to 10 years. We'll see consolidation. We'll see horizontal integration. We'll see vertical integration. Second, business models. I think we'll see 1, 2, maybe 3 companies really succeed fundamentally shifting their business models so that the investment community values them a little bit more highly. A shift towards services, technology, or network orchestration. I think you're already seeing companies in the space trying to become more of technology companies. And I think some will fail and some will succeed. The third is there are going to be vast advances in analytics and analytics just driven decision making. And I think there's going to be a real arms race over the next few years, keeping ahead of your competition to continuously differentiate in analytics across a whole swath, whether it be customer experience or efficiency and so forth. And then, while this may seem a little bit further out on the horizon, autonomous electrification, hydrogen in warehousing, first, last mile, over the road, those things are kind of here today. We're spending a lot of time with our clients as they're starting to place their bets in those areas, both on the manufacturing side and the transportation logistics side. As you know, there's a fundamental opportunity to reset the cost structure, incorporating autonomy, electrification, and so forth. And then related to that, maybe one thing else to mention is air mobility and autonomous movement of goods, particularly in the last mile. There's experimentation obviously going on today, and I think 5, particularly 10 years out, you're going to see that become more and more a key part of the fabric of this. So I think if I were to step back, I think this is a really interesting time for the sector. There's an opportunity for companies to fundamentally reshape how the sector operates, just given how much technology and analytics are advancing right now, given the M&A landscape, and given the opportunities to reset the cost bar via variabilization, electrification, and autonomy.
Erich, certainly an exciting time for sure, and a lot to sounds like that we have to look forward to. Erich, thank you so much for your time here today. We're excited to see what's up next for you and your team over at Deloitte, and we're looking forward to the future.
Thanks very much, Anthony. It was great to be with you.